Welcome back to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Wednesday 26th of February, looking at euro dollar, where euro dollar continues to recover. Actually, it's had three positive candles in a row now. It had a really decent run actually higher yesterday, because it looked initially early in the session that it was going to be faltering and falling over, but a recovery as the session went on into the close has formed another positive candle, and it is now breaking the market through this resistance. 108.60 area, 108.65 to 108.75, that old October low. Interesting base breakout, really, which we have seen form in the last sort of week and a half, really. You can see this pivot around 108.60. Old low became resistance, resistance again, and then since breaking out has now become supportive. So this is effectively a base pattern now. And you could argue it sort of implies around about 85, maybe 90 pips of upside recovery target, and that sort of brings you back into the realms of 109.50 area as an upside target. And you can see that the old low around that 109.40 area up towards 109.80, these old key November December lows, could well be tested as this market just recovers. And there's been a bit of a stuttering today, but you can see that the momentum indicators are still there in a recovery. You've got the MACD lines, which have now bull crossed high. You've got the stochastics sort of rising nicely, and also RSI back above 40. But I would hasten to add that this is a bear market recovery. RSI failed around the 50 mark back in early Feb, and also around this sort of level on the stochastics. So it is a recovery that I think is in process at the moment on a near-term basis. However, it is basically just a recovery within a bear trend and a bear phase. It's just unwinding this oversold position that the market developed through February. So it's just a bit of an unwinding move on that, and there is upside potential in that. As I said, 50 on RSI, and you're basically just in the low 40s at the moment. So there's room for recovery, but just be careful that bear market rallies tend to undershoot their upside targets. And I'm looking at this and considering how euro dollar is so negative since the breakdown below these key supports 109.80 and then subsequently 108.75. I really don't think that this recovery is going to be going too far before you start to see the selling pressure falling over again. That downtrend resistance comes in around 110 figure today, and of this downtrend since January. And as I said, there is room in it to move to the upside, but ultimately I think it's just going to be faltering, and so you're looking out for renewed sell signals. But at the moment, as things stand, is finding support at higher levels and resistance is being broken. So little corrections are a chance to buy near-term positions. RSI around 40 to 45 on the hourly is a decent entry point, as is MACD lines around neutral. But I would hasten to add that this is a bear market rally. So with that in mind, I wish you good luck in your trading. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars.